What is an example of an alternative investment? Stocks and bonds aren't the only way to invest. Some of the highest returns come from alternative investments. These are real estate, private debt funds, private equity. In this video, I'll show you some of the best alternative investments in the market today. Most investors only stick with the stock market, but the wealthiest investors allocate huge portions of their portfolio to alternative investments. Why? Because these investments traditionally outperform the stock market. If you're looking for strong cash flows, tax advantages, and assets that perform well in any down market, then private alternative investments could be for you. Stick with me and I can break down some of the examples, including what we're doing here at Patriot Holdings. By the end of this video, you'll know exactly what alternative assets are, why they can outperform traditional stocks and bonds, and how you can start investing in them today. So what are alternative investments? Alternative investments are non-traditional assets like real estate, private equity, infrastructure, debt funds, hedge funds, and commodities. They provide diversification, they hedge against inflation, and they often provide additional returns than average assets. Some of the largest investors in the world, institutions and ultra-high net individuals, invest up to 30 to 60% of their portfolio in alternative investments. So why do alternative investments outperform stocks and bonds? So number one, less volatility. These types of investments aren't impacted by the day-to-day of the stock market swings. Number two, higher cash flow potential. Many alternative assets generate higher consistent cash flow returns. These are called distributions versus dividends in a traditional stock. Alternatives offer tax advantages. Real estate, private equity, infrastructure investments, these offer depreciation, 1031 exchange options, and tax credits that can help improve your return. Real estate as an alternative investment. Real estate has been proven to be one of the most powerful alternative investments. My firm, Patriot Holdings, has been around for 15 plus years and we focus only on alternative investments. When I started out in 2007, I started buying mobile home communities throughout the country. This was a very niche, unique, on the fringe alternative investment class. That asset class has now expanded and it's become more institutional. We love affordable housing and so does the marketplace for investors. This is an alternative asset class that has grown significantly and these are the niche markets in real estate that you can generate high returns. Self-storage, another emerging alternative asset class. These have high margins, meaning high profit margins with low operating expenses. Consistent, strong cash flows. Tenants keep paying month to month and people need this type of product. They're running out of space to store their goods. And lastly, recession-resistant protection. Tenants need this space regardless of if the economy's booming or if it's busting. Warehouses and small bay industrial properties. This alternative investment has been growing significantly post-COVID. Since the advent of e-commerce and last mile logistics, there is a heavy need for this asset class, as well as in the growth of home services businesses like HVAC, pest control, plumbing, roofing. These contractors need a space to store their goods and yet they don't have that available because the marketplace hasn't built the product. This is an exciting asset class that I'm investing in here at Patriot. So an example deal at Patriot Funds, we like to buy self-storage or mobile home park or warehouses at 7% cap rates, but we focus on our stabilized yield after 18 to 36 months at 10%. Stabilized yield. That means we created more value and it produces higher cash flow. Check out another video I just did about how to calculate stabilized yield and why it's more important than cap rate. Private equity and private debt as alternative investments. Private equity funds buy and scale companies, and this is how they outperform traditional stocks. Private debt funds allow investors to lend capital to businesses and real estate operators in exchange for high yield returns. Patriot Holdings offers private equity real estate investments, giving investors access to direct ownership to the deals and the benefit of the high cash flow coming from the fund. Alternative investment type. Number one, real estate. This includes the four core of apartments, industrial, office, retail, and also storage, mobile home parks, even car washes. These have strong cash flow, tax benefits, and they are a hedge against inflation. The more inflation affects the economy, typically the higher these assets go up in value. The cons, they require active management and a trusted sponsor. If you have a bad partner, you could lose these assets and you're heavily dependent on the skill of the operator. Next, private equity. These private equity firms focus on investing in private companies. They like to buy a variety of companies like home service industries, garage door installers, pest control companies, roofing companies, also healthcare companies, even funeral homes. There's a wide variety of companies that these private equity firms like to acquire. The pros: high return potential, access to exclusive deals that you would not find on the stock market. The cons: it's a long lockup period, 5 to 10 years before you can expect to get your investment back. Next, private credit. This is lending to real estate or businesses. These private equity firms focus on lending to real estate operators or businesses. This is purely a debt fund or debt model. The pros are it's fixed income, where you get guaranteed payments through the debt payments by the borrower. It's a passive investment and require no work from the actual sponsor or operator. The risk is borrower default and not making their payments on the loans, and if the lender made a high leverage loan that was risky. Next is infrastructure, toll roads, energy, data centers. These are only available to high wealth individuals. They are very stable and create long-term consistent income. The cons are it requires a high capital investment and it's not available to the average investor. And lastly, crypto and collectibles. This includes wine, art, rare cars. The pros are these are non-correlated asset classes, meaning they're not tied to the stock market performance, and they have appreciation potential. The cons are there could be high fees, there could be very volatile, and there typically is no cash flow involved with these investments. So how do you get started in investing in alternative investments? Number one, decide what alternative investment strategy fits your goal. Number two, pick a trusted platform or operator you want to work with to make the investment. I'd love it if it was Patriot Fund 5 or any of my investment funds, but there's other options like crowdfunding platforms, institutions like BlackRock, Blackstone, or a wide variety of private equity firms that are continuing to raise capital. Step 3, start small. Get a feel of the investment and the investment sponsor you're investing in. This is the key to balancing out and diversifying your portfolio. Step 4, don't forget about tax advantages. Look at the investment and compare the tax advantages to non-tax advantaged investments and make sure that you're planning with your CPA or tax advisor so you're making the right investments that fit for your individual tax situation. Now that you understand all the different alternative investment types, it's time to look into how to analyze individual real estate deals. So click on the next video and I'm going to show you how to analyze an individual deal like a private equity pro. This way you ensure that if you're going to invest in alternatives, your eyes are wide open and you know exactly what to do that are going to generate you the highest level of returns.